Hello friends, today I am going to talk to you about the deductions under section 80C to 80G of Income Tax Act 1961. I am Srimati from Dr. Ambedkar Global Law Institute, Tirupati. Let us start with the deductions, that is 80C to 80G is deductions in respect of payments. So, if you make any payments or investments in any of the bonds, policies, then you may get deductions under section 80C to 80G. Let us see one by one. The first section is 80C. So, the following are the investments or the expenses which qualifies for the deductions under section 80C of Income Tax Act. Premium payments towards life insurance policies, then tuition fees for children's education, and repayment of principal amount on home loan, and registration fees and stamp duty for house property. So these are the few examples. So who can claim deductions under 80C means that is individual and HUF, Hindu undivided family. What is the qualifying amount to avail a deduction? So the deduction is available on the basis of the amount which a person contributes or HUF contributes or deposits or payments made by the taxpayer during the previous year. And what is the basis of deduction? So only on the basis of actual payment. Suppose you have an insurance policy due but you have not paid, then you are not eligible for this deduction under section 80C. How much deduction is available? The maximum of 1,50,000 can be get availed under section 80C. So is there any deduction in respect of accrued interest on national savings certificate? Yes, suppose you have deposited in national savings certificates, then definitely you will get a deductions under section 80C. And is there any minimum period of holding it? Yes, there is about a minimum period. Then only you are eligible to get those deductions. And ULIP, that is unit linked insurance policies, which has been terminated before 5 years. Any contribution made towards the plan, that is ULIP plan in the said previous year will not qualify for the deductions under section 80C. Under deductions in respect of national savings schemes, this comes under the section 80CCA. So actually it is not available presently. And the equity linked savings scheme 80CCB, and no deduction is available from the assessment year 93-94. And deduction in respect of pension fund under section 80CCC. So only an individual can claim this deduction, and the qualifying payment to get a deduction is only 1 lakh rupees. And is there any combined maximum ceiling means? Yes, it is combined together with the 80C. And what is the tax treatment of pension means? That is, if deduction is claimed at the time of payment of assessee, such pension will be taxable in the hands of recipient by the year of receptor. So, assessee or his nominee surrenders the annuity before maturity date of such annuity, the surrender value shall be taxable. Deduction in respect of contribution to National Pension Scheme, that is NPS under section 80CCD, and NPS, that is New Pension Scheme, is in 2003 and Atal Pension Yojana in 2016. Why it is? Because nowadays those who are employed after 1/1/2004, they are not having a pension scheme. So this scheme has started by the government. So the employees who are employed after 1/1/2004, for them it is compulsory to join this national pension scheme. So they can become a member, and it is option to those self-employed person. They may join or they may not. And employees contribution is, that is taxable if the employer they are contributing out of the taxable salary income, then they are eligible to get this deduction. And the deduction is up to 10% of salary is allowable. So suppose more than 10% means the balance is taxable. Then employee's contribution is, suppose the employee is contributing by him, and then 10% of such taxable salary is exempted, and then suppose other than an employee, that is example self-employed person means 20% of gross total income is allowable as a deduction. And is there any combined maximum ceiling? Yes, it is combined with 80C, that is total of 1,50,000. And the additional deduction they can get of 50,000 under 80CCD, that is IB, contribution made by the individual assessee. And the tax treatment of pension, since how it should be taxed. They are contributing certain amount to the pension scheme. When the pension scheme has terminated or taken back, then what is the treatment? The first one is pension has withdrawal from the scheme, and it to the extent does not exceed 20% of the employee's contribution, then it is totally exempted. Then it has been received by employee or non-employee on closure of his account. So at the time of maturity, then it is 60% is exempted. And suppose the amount which has been received at the time of, that is, death of assessee by a nominee, then it is totally exempted. The pension is received out of the NPS, then it is fully taxable. And amount received in any of the above, then utilized for purchasing an annuity plan in the same year, then it is exempted, but it should be kept or holding by assessee for certain period is mandatory. And pension received out of annuity plan purchased is taxable only. Let us see the next one is deduction in respect of investment made under the equity savings scheme 80G CCG. So assessee may be a resident individual. Then the gross total income should not exceed 12 lakh, and he has acquired the listed shares or listed units in accordance with the notified scheme. Then he should be, that is assessee should be a retail investor for the specified in the above notification scheme. Then the investment in linked in for a period of 3 years, the date of acquisition or in accordance with the scheme. Then amount of deduction is 50% of amount invested or 25,000, whichever is less. The deduction is available for the 3 consecutive assessment year available from 2017 to 18. The next session is 80D. The first only over, that is 80C, now 80D. Deduction in respect of medical insurance premium, 80D. So both the individual as well as HUF are eligible for this deduction, subject to the payment of being made in the modes other than cash. Suppose if you are paying the premium by cash, then you are not eligible to get this deduction. But nowadays everything is on online. So this includes payments on behalf of spouse, children, parents or self to the central government health scheme. And an amount of 25,000 can be claimed as a deduction when the additional deduction of 25,000 can be for mediclaim for the life of senior citizen, and but should not exceed a maximum limit of 50,000. Altogether it is 50,000. And deduction in respect of maintenance including medical treatment of a dependent being a person with disability, that is a person with disability, if any one of there, then they can get deduction under section 80DD. So a resident or individual, that is a resident individual or resident HUF can avail this, and the qualifying expenditure is for the only for the medical treatment, and or even for the training and rehabilitation of this person with disability also allowed. And who are they means dependent, that is spouse, children, parents, brothers or sisters, and who is wholly or mainly depend upon the individual. And a person with disability means 40% or more of blindness, low vision, leprosy, hearing impairment, locomotor disability, mental retardation and mental illness. And how much the amount of qualifying means a fixed deduction of 75,000 to 1,25,000 is available having a disability of 80% or more. And deduction in respect of medical treatment etc. for ATDDB, individual and HUF can claim. And qualifying expenditure is the expenditure incurred for medical treatment of specific disease or ailment as prescribed by the board for the senior citizen, not for others, okay, only for senior citizens. So they can claim 40,000 to 1 lakh as in the case of senior citizens expenditure or whichever is less. Then SSA is required to obtain a prescription from a specialized doctor for the purpose of availing these deductions. Next one is 80E, the deduction in respect of payment of interest on loan taken for higher education, mainly for students or the parents of the students. 80E. So only an individual can claim this. The qualifying expenditure is the loan should be taken by an individual for higher education, that too from bank or financial institution or from an approved charitable institutions. Then the not loan amount, only the interest is deductible in the year in which the interest is paid. So here the loan for whom it should be taken means interest is deductible and the loan is taken for pursuing assessee's own education or for the education of his relatives. Then maximum monetary ceiling is the entire interest is deductible in the year in which the assessee starts paying interest on a loan and subsequent 7 years or until the interest is paid in full. So there is a liberal ceiling for this interest on loan for education. And interest should be paid out of income which is chargeable to tax, not from the exempted income. And deduction in respect of interest on loan taken for residential house property, ATEE. So the conditions are the individual may be a resident or non-resident, they can avail this deduction, and he has taken a loan for what? Means for acquisition of residential house property, for purchasing house property, and the loan should be taken from a bank or housing finance company, and loan should be sanctioned between April 1, 2016 to 31st March 2017. In this period only they can avail this deduction under section 80EE. And amount of loan sanction for residential house property should not exceed 35 lakhs. The value of this residential house property does not, that is stamp value, should not exceed more than 50 lakhs. So assessee does not, the condition is the assessee should not own any residential house property on the date of sanction of loan. So amount of deduction is the interest payable on the above loan or 50%, whichever is less is available for deduction from 2017 to 2018. And double deduction is not possible. Suppose assessee avails a deduction under section 80EE, then the assessee is not allowed to take any other deductions of the same act, that is from Income Tax Act. And the next one is deduction in respect of interest on loan taken for certain house property, ATEEA. So assessee is only an individual assessee and who is not eligible to claim the above deduction, that is ATEE, then they can avail this deduction ATEEA. The loan has to be taken for the purpose of acquisition of residential house property, and loan is sanctioned between the year 1st April 2019 to 31st March 2022. The stamp duty of the value should not exceed 45 lakhs. Though the assessee should not own any residential house property on the date of sanction of loan, and the amount of deduction is the actual interest payable or 1,50,000, whichever is less from the assessment year 2020-21 and the subsequent years. And same interest is not deductible twice. Once they get eligible under section 80EEA, then they are not again eligible to get deductions under section 24B under income from house property. And the next one is deduction in respect of interest on loan taken for the purchase of electric vehicles, ATEEB, because nowadays this is about grooming one, and assessee should be an individual. The loan has taken for the purpose of purchase of an electric vehicle, and loan has taken from the financial institution. Loan is sanctioned during the year 2019 to 23. And the amount of deduction is the interest payable on the above loan or 1,50,000, whichever is less is available from the year 2020 to 21 and the subsequent years. The same interest is not deductible twice. If they claim under section 80 EEB, then it should not go for any other provisions of the same act. The next one is 80G. The deduction in respect of donations to certain funds or charitable institutions, etc. 80G. Section 80G encourages taxpayers to donate to funds or charitable institutions offering tax benefits on monetary donations. So it's about to encourage the donations to the needy. All assessees are eligible for this deduction. Assessee should have the proof of payment, and the limit of deduction is decided based on few factors. So here 100% deductions without any limit. Suppose a donation is given to certain funds, then 100% deduction is available. Examples, since there is about a list, I have given only few examples like National Defence Fund, Prime Minister's Relief Fund, National Illness Assistance Fund, etc. So the qualifying is 100% of deduction on the amount which has been donated. Then 100% deductions with qualifying limits. So the donations to local authorities, associations are institutions to promote a family planning and the development of sports, then qualify for 100% deduction subject to certain qualifying limits. And 50% deductions without qualifying limits, like donations to Prime Minister's Draft Relief Fund, Rajiv Gandhi Foundation, etc. like, okay, then 50% is eligible. And 50% deduction is with qualifying limit, donations to religious organizations or local authorities for the purpose apart from family planning or other charitable institutions, then they can get eligible 50% of deductions. And deduction in respect of rent paid under section 80GG. So who can claim means only an individual can get this deduction. He can be self-employed person. The individual means even a self-employed can get this. And the qualifying expenditure should be and rent for a residential accommodation for himself can avail this deduction. Can a person who pays rent avail the deduction on own house? So a taxpayer, or particularly that is the taxpayer or his spouse or his minor child, or from HUF of the taxpayer is a member. What is the amount of deduction? Rupees 5,000 per month, 25% of total income, or the excess of actual rent paid over 10% of total income, whichever is less is allowed as a deduction. The deduction in respect of certain donations for scientific research or rural development under section 80GGA. So the assessee should have a income under the head of profit and gains of business or profession. Then only the assessee can claim this deduction 80GGA. And the qualifying expenditure is should be it is either donation or contribution to such an institutions like a research association or university, college or other institutions to be used for scientific research or rural development. Suppose if they are eligible to get this, then the project should be approved under section 85AC. And amount of deduction is 100% for the said donation or contribution is deductible. The donations can be given in cash or check or even draft. No deduction shall be allowed under section 80GGA in respect of contribution exceeding rupees 20,000. So it is applicable in all the sessions of 80. Deduction in respect of contribution given to political parties or electoral trust. 80GGC. While computing the total income of assessee, any sum contributed during the previous year to any of political party or electoral trust shall qualify for deductions. You know the meaning of political party and electoral trust. Okay, so this deduction is not available to a local authority and every artificial judicial person wholly or partly founded by the government. The donation can be used for this advertisement expenditure. Hope you have understood. Stay tuned until the next. Bye.